Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, September 25th, and we'll see how things look for Friday, September 26th. Going over Thursday's market action, the S&P 500 closed lower, shedding 0.5% on above average volume. The index ended the day just above 6,600 after testing support at 6,575. It opened with a gap below the S1 pivot point at 66.16, dipped below S2 at 65.93, but managed a late-day rebound to close above the S2 level. While the S&P 500 remains above its critical 20-period moving averages, signs of short-term weakness are continuing to emerge. The technical indicators are flashing caution. The parabolic SAR has turned negative, and the ADX is weakening below its moving average, signaling a fading bullish trend. The Stochastics and other indicators are also trending bearish, with the S&P-to-VIX correlation pointing to a pickup in volatility. Sentiment has cooled, shifting from positive at 57 to now neutral at 52. The smart money indicators, including accumulation distribution, Chaikin money flow, and oscillators, have all turned negative. The accumulation distribution is still positive, but in the short term, it is seeing some weakness. And the bullish percent index, while still above 50, is declining below its moving average. Declining advanced decline lines and contracting new highs further highlight internal market weakness. On the economic front, robust data is raising doubts about future Fed rate cuts. GDP growth was revised up to 3.8% from 3.3%, beating expectations. Jobless claims came in below expectations at 218,000, and durable goods orders rose 2.9% against an expectation of a decline of 0.5%. The 10-year Treasury yield has climbed to 4.17%, defying expectations of a pullback after recent Fed cuts, a pattern we also saw last year in September and December. Looking at sector performance, energy was the standout, helped by rising oil prices. Meanwhile, megacap and growth stocks struggled, with Oracle notably down over 5.5% despite its involvement in a TikTok deal. The US dollar has entered a short-term uptrend, which could add further pressure on stocks. Looking ahead to Friday, September 26th, historical trends offer a mixed picture. Since 1980, September 26 has generally been positive for the Dow and S&P, but the week following options expiration often sees softer performance. September's second half also tends to be weaker seasonally. All eyes will be on Friday's economic releases, the core PCE inflation report and consumer sentiment data. Both are critical for gauging the Fed's next moves, especially after recent strong economic data has reduced expectations for additional rate cuts. Geopolitical events, while notable, are currently having minimal impact on the markets. From a technical perspective, the S&P 500 remains in positive territory across the short, intermediate, and long-term timeframes, supported by the 20-period exponential moving average on Thursday. However, a break below this key support level could push the index toward the 50-period moving averages. The 65.90 level will be a critical pivot for options-related gamma dynamics, so we should watch that closely. What are the key takeaways and conclusion? Despite Thursday's short-term weakness and negative technical divergences that have been developing over the last few months, the S&P 500 is holding above its key support at the 20-period moving averages. Strong economic data is driving up yields and the dollar, which is a surprise, which may continue to weigh on stocks. Friday's core PCE report will be pivotal as it could clarify the inflation outlook and the Fed's policy path. A hotter than expected report might intensify selling pressure, while a softer reading could possibly spark a relief rally. In conclusion, the S&P 500 is showing resilience but faces downside risks if support levels give way. It's best to stay vigilant, keep an eye on Friday's data for clues about the market's next moves. Thank you very much, and I will talk to you in the next podcast.